What's up guys, and welcome back to my channel. So today I'm back again with another strategy that we're going to be using to trade indices, right? So it's quite a simple strategy. We're going to be using it on the 5-minute and the 15-minute time frame, right? So that's what we're going to be doing. So it's just the same indicators that I posted in the previous video on the boom and crash. I just don't want to put it in the same video because the video will be too long, right? So right here, the same conditions apply, right? So let me show you what the settings for the indicators, then I'll jump into it, right? So for the main chart, we are going to be adding the moving average with period 20 shift 0 method exponential apply to close. In color, you can choose any color of your choice, right? Then click on done, right? Then for the indicator window, we're going to be adding the RSI, relative strength index, with the period of 1 apply to close. And then for the levels, we're going to be adding levels 10, 20, 80 and 90, right? Take note of those levels, then click done, right? Then for the first moving average on the indicator window, we're going to be adding a moving average with period of 10 shift 0 method exponential apply to close, right? Then click done. Then for the last indicator on the indicator window, we're going to be adding the stochastic oscillator, right, with a period of 56, 3, 3, lower high, simple. Then for the pixels, make sure you choose the 1 pixel so that your lines aren't too thick, right? Then you can see them out clearly, right? Then click what? Done. Now we are done setting up what our indicators. It should look like what? Like this, right? So the main difference between this strategy on the indices and the one on the boom and crash is that, as you know, the indices consolidate more before they go into profit, rather than the boom and crash. The trade can go straight into profit and whatever, right? So the main difference is going to be on our stop loss, right? So on our stop loss, we're going to be increasing okay, so let's start for the conditions. So for the conditions, firstly, the moving average and the stochastic have to reach level 80 and 90, right? And then that's when you place your sell, right? After they cross right there, right? And then after that, then we wait for our candle close below the black moving average on the main chart, right? And then you place your stop loss above the previous high. So for the indices, you can place the stop loss a little bit higher than rather than the boom and crash, because the boom and crash goes straight into profit, especially if you are scalping ticks, right? So that's what we're going to be looking for, as you can see right here. As you can see here, the stochastic and the moving average reached the level 10 and 20 together, right? After that, we wait for candle close above which is somewhere around in here, right? Above the black moving average on the main chart, right? That's when you enter our buys, right? Stop loss slightly below this previous low, right? And then take profit. We're going to be targeting the main structure points, or we're going to be waiting for our stochastic to reach level 80 and 90, right? So in both the scenarios, our TP would have been hit right there. And then here we've got another entry right here, right? So our stochastic and the main moving average reached level 80 and 90, right? We enter our sell when the candle close below the black moving average, right? We exit when the stochastic reaches the level 80 and 90, or on this demand right here, right? So that's what we'll be doing. So remember guys, you always have a price action point of view. You can use supply and demand, price action, support and resistance, or any other strategies that you might want to add to simplify your trading, right? So here we've got another entry. This is my last example, right? So here the stochastic and the moving average reached level 80 and 90 together, right? Then for our entry, we're going to be entering when the stochastic, when the candles close below below the moving average on the main chart, right? Then we hold to our stochastic reach the level what? The level 20 or 10, or you could have taken profit here on this demand, right? So that's it for this video, guys. If you like the content, subscribe and like the video, right?